Howdy. Welcome back to Dion Talk. If this is the first time to my channel, the goal of my content is to help the average individual learn that you can reach financial freedom in 10 years or less, even if you're not starting from the best position. And what I've done is invested in buy and hold real estate. And primarily I've focused on 4 units or less because I like the loan structure. The biggest problems I've had with going with 5 units or more is I don't want adjustable rate mortgages. None of us know what's going to happen to rates in 5 years. And I don't want a loan reevaluation period because there could be a time 7 or 10 years from now when you have a year where not a lot of leases renew and there might be something like a recession or a pandemic. And I don't want to be stuck in that type of lending situation. But recently, while watching one rental at a time, I actually ran across Convoy Mortgage. They actually have a loan product for up to 8 units that gives you the things I need. So I've actually got offers in now on more than 4 unit properties. So today I have Dustin and Jonathan from Convoy, and they're going to explain a couple of things, and I'm going to confirm a few things for myself. So this is a little bit of a selfish video, but I'm hoping to share this information with you. So welcome to the show, guys. Can you tell me a little bit about Convoy and things like what states do you guys operate in?
Absolutely. My name is Dustin. Partner is Jonathan. We are owners of Convoy Home Loans. We actually operate in all 50 states for investment properties. So I think we're in 16 states right now, though, for owner-occupied properties.
And adding more, yeah.
I want to confirm for the people watching, this is a 30 or 40-year loan product for up to 8 units that doesn't have a loan reevaluation period.
Correct.
Okay. It is a fixed rate mortgage.
Correct.
The really cool thing is I was able to, find the property, make my offer, get a hold of you guys. You guys were super prompt, which is the most important thing to me when it comes to a lender or an agent, is not waiting 2 or 3 days for a response. That would be a deal killer for me, and you guys were right on it. So I have the offer in, and it hasn't come back whether they've accepted it or not. I'm in the limbo that a lot of investors get into. But the really cool thing is I still haven't chosen if I want the 30-year loan product or the 40-year loan product. I get to do that after the offer is accepted. Can you guys explain what the differences are between those two?
Yeah. So, the pre-approval that I wrote for you, was it a couple of days ago? I kind of lose track of time.
I think it was Monday or Tuesday. So yeah, I do the same thing 1 or 2 days ago.
Crazy. Yeah. You could have told me it was last week and I would have believed you. So essentially the product that we went over, that you have the option, you actually had 3 options. One is your typical 30-year fix, right? Just like everybody knows, everybody pretty much is familiar with if you own a primary residence, right? Fully amortized principal and interest payments over 30 years. The other 2 are interest only, where there's a 30-year interest only and a 40-year interest only. Now, both of those are fixed the entire time. The difference, or I guess the one similarity between those 2, is that the first 10 years of both products, you're only required to pay the interest portion of the payment. So it's interest only for 10 years on both products, right? The difference is that on the 30-year interest only, after the first 10 years, it converts to a fully amortized 20-year fix, right? So it's a 10-year interest only, then a 20-year fix. The 40-year interest only is 10 years of interest only, followed by a 30-year fix. So when you get to year 11, that's where it changes, because a payment, when it's amortized over 20 versus 30 years, the payment that's amortized over 20 is obviously going to be a little bit higher.
The payment actually changes at the 10-year mark?
11.
Yeah. At the 11-year mark. As an investor, I'm looking at this because I'm looking at cash flow. That's why I don't really care about the interest only or the amortized portion. If you're a home buyer and you plan on selling in less than 5 years, it's not a loan product I would suggest. I would say the regular amortized 30 loan, your product is probably better. But for me, and here's a quick Cliff Notes example that I might take out of this video.
But not today.
Last year, the size of my portfolio, I have 16 units on 7 properties. I invest in small multifamily. I experienced about $3,000 a month in principal paydown, but I experienced over $600,000 in appreciation. So the appreciation to me was much more important than the principal paydown. That's why I'm okay looking at an interest-only portion of these loans going forward. I will have to look at the schedule of the payments to see what will happen at that 11th year, to figure out which loan product I end up going with. And I'll probably leave a comment below when I actually make that decision.
Another reason why investors should love 40 years is on your tax returns, when you file a Schedule E, right? The only thing you get to actually write off on your schedule, right? One of the biggest write-offs, there's depreciation and then there's mortgage interest, right? So, if you get to write off mortgage interest, that actually, it's money in your pocket. You're going to have to pay the IRS anyways, right? So you get to write that off as a line item and lower your overall income, and the IRS allows you to do that. So it's kind of a neat kind of thing that allows investors to take advantage of the tax code, because if they pay it off, they don't get that little write-off, right? They have to pay the extra income. So they don't get to write off the principal, just the interest.
I say often on here, don't make a decision based on the taxes, but when you make your decisions, make sure you're benefiting from the taxes. And that's a perfect time to actually factor that in. There was something else I want to talk about too. My loans up until now have been done through banks or something like Fairway Mortgage or Guild Mortgage, where they're residential, 4 units or less. And they basically say, we need bank statements, pay stubs, tax returns, blood sample, just some simple stuff. This was the first time doing a 5 unit or more where you guys asked for a PFS and an REO. So I feel like I had to grow up a little after 10 years of investing and actually figure out what those were. And thanks to Matt, the lumberjack landlord, for helping me out. I reached out to him as a friend to have me, to explain to me what those are. Can you cover for the people watching, what are those two documents?
Yeah, so it's abbreviated REO, which is real estate owned, and simply put, on a lot of our emails, if you receive emails from us, you'll see SREO, which is schedule of real estate owned. Basically, it's listing out all the properties that you currently have in your portfolio that you own and have financed, right? So for the purposes of this product, our main focus is the finance properties. More than the non-finance properties, but the schedule of real estate allows us to kind of see a top level down view of what your portfolio looks like currently. And then the personal financial statement is the PFS. And that's basically just a breakdown of all your finances, assets, if you have any liabilities, what you have in the bank, all of that kind of written out in one easy form for the lender and us to read. And it allows us to kind of see your whole financial picture with just the PFS and the schedule of real estate.
If this is your first time hearing those terms, it sounds kind of confusing and it seems like a lot of work, but it probably took me 30 to 45 minutes to put that together. So it wasn't like it took a whole bunch of research. I actually went to the websites to look up the mortgages to find out what the current values were, what the payments are. It didn't take a lot of work. I did it in an Excel spreadsheet. I've never cared what my net worth is. It's not a number I've tracked. It's not a number that's mattered to me. The only time I realized my net worth passed $1 million was a year ago or so. I did a video on what came first, $1 million in net worth or $1 million in debt. But doing this spreadsheet, putting the information together and actually seeing my personal financial statement, which I had never done, it's kind of interesting to see what happens as your portfolio grows. When you have 1 or 2 properties, there's not a lot of change from 1 year to the next. But when you start having 6 or 7, 1 year makes a huge amount of difference. So I'm actually glad I did that exercise, because I actually saw a net worth on there and I was thinking, I would probably date me. But going forward, I'm hoping that more and more people consider the 40-year fixed rate mortgage, because increasing cash flow is what matters to a buy and hold investor. A lot of people think, I really want to have a mortgage paid off. And to be clear, I would do a 1,000-year mortgage if it got me the return on investment I was looking for. I don't care if the properties are paid off. I don't care what the debt is on them. I care what my cash flow is. What is the best way for somebody to get a hold of you guys?
You can reach out to email privateclient@convoyhomeloans.com, or go to our website and you can fill out the web form, and it'll also shoot it to Dustin and myself. And if you guys have any questions, if your viewers have any questions, Dustin and I are more than happy to personally handle those as well.
Awesome. I appreciate that. I want to thank you both for coming on here today. I appreciate it.
Thank you, Dion.
Thank you.
Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.